Previously, in the Renko trading channel, we discussed how Renko charts strengthen your trading psychology, avoid overtrading, and see the big picture. In that video, I showed how Renko's clean charts help you avoid emotional trades, stay patient, and see the bigger market trends without all the noise. Hi traders, this is Carl. Welcome back to the Renko trading channel, where we simplify investing with logic, not emotions. Today, we're taking that further. I'm revealing 7 powerful Renko investing secrets to help you invest stress-free and aim for bigger profits. Remember, everything here is for educational purposes only. Let's dive in. Secret number 1. Frequent in and out of the market adds up quickly. Every trade has a cost. Commissions, bid-ask spreads, and emotional wear. For example, if you bought Home Depot at $300 and held it until it reached $400, you'd make about 33% profit. Simple and stress-free. But if you tried to buy and sell frequently along the way, not only would you have to be right most of the time, your timing would also have to be perfect. Otherwise, your profits might end up being much less. Look at this example. Even after all that trading, with only 2 small losses, your total gain is only about $65 per share, or about 21.67%, compared to just holding it for a 33% gain. Plus, think of all the stress, commissions, and chances to make mistakes along the way. Because honestly, needing to trade all the time isn't freedom. It's stressful. Secret number 2, don't overcomplicate your trading rules or strategies. Keep them simple and actionable. Use Trendlines on your Renko chart to determine entries and exits. Don't rush to do it all at once. Or if your stomach can't tolerate market drops, here's another approach: use a percentage retracement from recent highs as your exit plan. For example, exit 30% of your shares every time the stock drops 10% from its recent high. This way, you lock in profits gradually while protecting yourself from deeper losses. Let's look at this example. Home Depot shares broke above the descending trend line, giving us a clean Renko entry signal. We decide to buy 300 shares at $320 each. From here, we'll manage the position using simple rules: partial exits based on percentage retracements if the stock starts pulling back. The first leg up reached a high of around $390. From there, Home Depot entered a correction phase. A 10% drop from $390 brings the price down to around $350. At this point, we sell 1/3 of our position, which is 100 shares, to lock in some profits. We continue to hold the remaining 200 shares, giving us exposure if the stock continues its uptrend while reducing risk in case the correction deepens. Home Depot found support at around $330 and then resumed its uptrend, eventually reaching a new high near $420. After that, correction began. A 10% drop from the recent high of $420 brings the price down to around $385. Once the price breached this level, we sold another 100 shares at $385, locking in additional profits while still holding the remaining 100 shares for further potential upside. The goal here is simple: no matter what entry and exit strategy you use, keep it straightforward and stick with it. Don't let news headlines or market rumors sway your decisions. Trust your strategy, trust your charts, and stay disciplined. Secret number 3, use ATR brick size to see recent trend volatility, but traditional brick size to plan your trades for clarity and consistency. ATR shows recent market volatility, while traditional bricks provide consistency for planning entries and exits. In this example, Microsoft's ATR brick size is about $6.83, which reflects the most recent 14-day ATR. If you aren't sure what traditional brick size to use, you can use the ATR as a guide. Start with 5. If 5 is too small and creates too many bricks, making the chart look noisy or confusing, try increasing the size to 8 or 10. Keep adjusting until you find a brick size that provides a clear view of the price action without unnecessary noise. Once you find that optimal size, stick with it and plan your entry and exit strategy accordingly. Secret number 4, don't let news headlines guide your investments. Let Renko guide you. Take a look at the S&P 500 chart. After the recent headlines about tariffs, inflation, interest rates, and other market fears, if you were watching the news and following every expert's advice, you probably would have sold all your investments and moved everything into gold. But look at the Renko chart. Using the techniques I mentioned earlier, we would have sold some of our holdings to manage risk, but would still be holding the rest today. And what happened? The S&P 500 broke its all-time high and set a new record. This is why it's so important to let the charts guide your decisions instead of headlines and fear. Secret number 5, take breaks. Let Renko do its job and set alerts for brick or trend line breaks to reduce screen fatigue and avoid forced decisions. Secret number 6, don't try to capture every single brick. Focus on meaningful trends to protect your capital and mental energy. Secret number 7, markets are cyclical. Renko charts make trends, consolidations, and reversals crystal clear, helping you stay patient and positioned for strong breakouts. If these secrets help simplify your investing mindset, like, subscribe, and check out my blog for free Renko strategy guides. Invest with clarity, not complexity. That's a wrap on today's breakdown. Thanks so much for watching. If you found this helpful, give it a like and hit subscribe for more Renko trading insights. Don't forget the bell icon, and I'll see you in the next one.